I'm Joshua Roberts of Biz News, and with me for today's Market Insights is Piet Viljoen, a host of M&A activity between the precious metals producers. This week alone, Sibanya, Impala, African Rainbow Minerals today announcing proposed acquisitions and or takeovers. Let's start with Sibanya, looking to benefit from metals that'll play an influential role in the green economy going forward. I spoke to Peter Major on Tuesday and Wednesday. He was a bit skittish of the deal. What are your thoughts?
Yeah, look, one always gets worried about commodity producers when they start doing M&A. Although I do think if one looks at the range of transactions that have been announced over the past week or so, by and large, they're mostly sensible. And even Sibanya has, for quite a while, spoken about their strategy to get involved with green metals, because that is definitely a trend that is going to be playing out over the next 20 to 40 years, is the green economy and infrastructure around the greening of the economy. So to get on board that trend, I think is not crazy. The prices they're paying for the assets are not crazy prices. So I think it's the start of the beginning of the top of the cycle, but it's not the top of the cycle yet. Nobody's paying crazy prices for stupid assets. The deals all make sense from a strategic point of view, and the prices are not over the top. So I don't think these transactions signify a top in the cycle at this point in time.
Although Pete did cast a bit of doubt over Sibanya's proposed acquisition, he did say Impala's proposed buyout of Royal Bafokeng made complete sense from a synergies perspective, and that consolidation would create. Do you agree with this?
I agree with the Impala RBP transaction. I think that it makes a lot of sense for both parties. The Sibanya transactions, I think the first thing one should realize is that in the life of Sibanya, they're not massive. They're not transformational transactions. They're fairly small relative to the size of Sibanya. So again, even if he's possibly paying a little bit too much to get involved in those metals, it's not going to drag the whole ship down. He's not taking on lots of leverage. He's got lots of cash flow, lots of cash in the balance sheet that he can use. So, I don't think he's introducing financial risk into the business. And these are also not transformational transactions, which is probably a good thing. So I'm not that worried about it. And also one has to give Neil Froneman, the CEO of Sibanya, credit. Over time, most of the transactions he's done have turned out well. So he's got a very good track record. And I think that is something one needs to think about as well.
Long for Life came out earlier today. They said that they're progressing in talks with their prospective acquirer. Given the pace of delistings in the small cap space, possibly indicative of valuations that these businesses trade at, it must be notably harder for JSE fund managers like yourself to find opportunities given the smaller or the ever increasingly smaller investment universe.
Yeah, look, the investment universe is shrinking, but there are still a lot of really good businesses listed on JSE. I think if you're managing 50 billion rand, you might have problems. But if you're managing a sensible amount of money, then there are still tremendous opportunities. And the small cap sector has done fantastically well over the past year or two. So I think and it's still not expensive. There's still many buyouts happening, and buyouts happen, or taking privates happen, when companies are undervalued. They don't happen when they're overvalued. They definitely happen when they're undervalued. You get lots of IPOs when valuations are high, because business people know the value of their assets much better than fund managers or the man in the street. So when you have lots of IPOs, you can generally say that assets are overvalued, and the business people are getting, that's why they're selling via IPO. And when there are lots of taking privates, like there are at the moment in the small cap sector, assets are generally undervalued because the business people who are taking them private know what they're getting and know what they're paying for that, and they're not overpaying.
AB InBev up almost 10% on their results today, a huge increase in value given that size of the business.
Yeah.
In the results, South African Brewers or SAB commented that Carling Black Label sales were particularly good. Two-part question, is this a company that you follow, Pete? And have you been contributing to the outperformance of Carling Black Label?
The question one, yes. Question two, no. I prefer wine. But in terms of question one, yes, it is one of the top 10 holdings in the Counterpoint Value Fund. I think it is a business which is highly leveraged, and it sells a product that people want. And as it pays off the debt over the next 10 years, the value of the equity will, I think, has a chance of showing exponential returns. And I think this is step one in that process where the earnings came out much better than the market expected. And they're going to reduce the debt in the business. And in terms of the enterprise, even if the enterprise value stays the same, the value of the equity will go up. And I actually think the enterprise value could also go up. So I think you could see exponential returns from equity in this business over the next 10 or 20 years. And that is one of the strategies I think that, at least to me, makes sense, is to buy the equity of highly leveraged businesses if you expect inflation to be higher over the long term and real interest rates to remain negative. I think these guys can pay off the debt quite easily and thereby increase the value of the equity in the business.
Staying on the beverage theme, I read rumours this morning that the PIC wants 200 Rand a share for Distell from Heineken. Is Distell worth this value?
It's hard to say. I think 200 is quite a rich price. Heineken might pay that because in their life it's probably not that big, but that is quite a rich valuation for a business which generates fairly good returns, but it hasn't done fantastically well over the past 10 years or so. It's a good business, but it hasn't shot the lights out. So 200 Rand is quite a high valuation. If I can get that, I would. If I own Distell shares, which I don't, or my funds don't, I would sell them at 200 Rand for sure.
Hyprop and Growthpoint have both recently come out with comments on their bearish outlook for South Africa. Do you think either private property investment or exposure through a REIT will provide meaningful returns in the next 3 to 5 years?
Generally, no, I don't think so. I think there are a couple of factors at play. First of all, I think REITs are not great structures in terms of owning assets because they have to pay out such a high proportion of the income. There is oftentimes very little left for the maintenance of the properties and the upkeep of the properties. So you'll find that those properties, the value of the properties that the REITs own declines over time. And the REITs were nice when people wanted income and paid a premium for income, but I think those days are over now. So the structure, I think, is problematic. The other points, the more fundamental points, are that I think because of the high prices that South African property traded up until about 3 or 4 years ago, the sector became massively overtraded. Everybody developed a new mall somewhere or a new office block somewhere. So I think the supply of office and retail space has completely overshot demand. I saw stats, I think it was 2-3 years ago, that per capita, South Africa had the highest amount of retail space in the world, which it just strikes me as completely illogical. And, when all these overseas companies are coming to list their property shares on the JSE, like Capital Counties, Hammerson, all these, were listing in South Africa as if, and people here were just buying these shares because they were so in love with property. That was just a sign of the times. So the market's overtraded, so there's that headwind. And then there's the headwind of economic, the fact that the economy is not growing. Load shedding and other things are contributing to a decline in the economy. So trading will be disappointing, I think, over the next few years. So property, especially in the REIT format, faces substantial headwinds, and they're not priced cheaply anymore. I mean, they've had a strong run-up, and I think they're generally not priced cheaply. There are some stubs here and there which might offer value, but generally, I don't think there's value in REITs at this point.
Lastly, Piet, Alec added Aveng to the BizNews portfolio earlier this week. He bought 15 million shares at 6 cents. It's his single largest initial investment at 900,000 Rand, which constitutes 8% of the portfolio. I know you've been bullish for a while, but at 6 cents, Alec wanted to ask me, is that a good investment?
Look, I think Aveng could be a good investment if we have a infrastructure cycle picking up in South Africa over the next 5 years. Then I think Aveng could turn out to be a really good investment. I think globally we will definitely have infrastructure spend, and I think Aveng, given their offshore entities will benefit from that. And locally, if the mining sector continues to grow, Aveng will also benefit from that in the sense that a large portion of the business provides service to the mining company. So I think there's a likelihood that it can turn into a good investment from 6 cents onwards. It's not expensive. I think it does need to consolidate the shares because they're trading 5 cents, 6 cents. It's quite a spread. It's a 20% spread. So once they consolidate the share number of shares, then I think it'll trade more reasonably. But I think longer term, I'm very comfortable with Aveng. I still own the Aveng in the fund, in the Counterpoint Value Fund.